And now for a look again at the world's business news. In times of economic turmoil, one of the few sectors that has managed to thrive is the luxury sector. The case in point is the IPO of German luxury car brand Porsche. Charles Pellegrin, our business editor, is here on set to tell us more.
That's right, Aaron. Porsche stocks start trading this Thursday in Frankfurt, and the IPO could be on track to become one of the largest in Europe in more than a decade. Now, Volkswagen is pricing the IPO at the top end of the range, valuing it at more than 75 billion euros. This shows investors confident that the sports car brand can continue to be profitable, even as interest rates rise and inflation is taking hold globally. Its buyers tend to not be as affected by those macroeconomic factors, with a starting price for a Carrera model at 100,000 euros approximately. Well, the brand has shown a strong earnings record, posting revenue of over 33 billion euro last year. The deal will bring Porsche into the top 5 biggest car makers as measured by market value, behind parent company VW, but ahead of Mercedes-Benz.
Porsche was and is the gem within the VW group. But up until now, that gem was somewhat hidden, and we weren't sure exactly how big and heavy it is. Through this public listing, it is now becoming very transparent how the market values Porsche as a company. This in turn has a positive effect for VW shareholders, because they profit from this transparency. I believe this will also lift the value of the VW group.
And in other car news, Chinese electric vehicle maker BYD is pushing ahead with its push for global market share. It's unveiled its pre-sales prices for vehicles that will be sold on the European market. 3 of them were unveiled on Wednesday, 2 at 72,000 euros and 1 at 38,000 euros. The company is also one of the world's leading battery producers. It overtook Volkswagen last June to become the world's 3rd most valuable company. And before we take a look at the markets, some central bank news. In the UK, the Bank of England took emergency action on Wednesday to avert a meltdown in the country's pension sector. This after a crisis in government debt markets following a new fiscal plan of unfunded tax cuts presented last week. Some types of pension funds rely heavily on government debt and were forced to start selling theirs, which caused the turmoil. The BOE is pledging to a 65 billion bond buying program at a rate of £5 billion a day for the next 13 weekdays. The value of the pound and gilt yields recovered following the intervention, although the pound has dropped again against the dollar this Thursday morning. And faced with the yuan hitting its lowest level since 2008, the Chinese Central Bank, or the People's Bank of China, is warning against betting on or against the Chinese currency. This is a guidance encouraging traders not to short the yuan and contribute further to its drop against the dollar. And the news of the BOE's market intervention led to a rebound on Wall Street on Wednesday night, which has then led to a rise in share prices on the main Asian indices this Thursday, at least for a while. Let's take a look. As you can see, both the Shanghai Composite and the Hang Seng in Hong Kong now in the red, whereas the Nikkei in Tokyo closed almost up 1%. And at the opening bell in Europe, the positive sentiment from the Bank of England intervention has also worn off. As you can see, the FTSE in London down by 1%, same with the CAC 40 in Paris, and the DAX in Frankfurt down by 0.8%. And we started by talking about the luxury sector being insulated from economic turmoil. Let's go down the value chain to a sector that definitely is affected. Bakeries in France are now concerned they'll have to bump up the price of the iconic baguette to €1.50 because of the rise in the price of wheat and flour, and also because of the rise in energy costs, as James Mulholland explains.
For French bread connoisseurs, this bakery is one of the best on the Côte d'Azur. Business is brisk as usual this morning, but now customers have to hand over a sou or two more for their baguette.
It's not cheap, but that's how it is these days. Everything's more expensive. Wheat, flour.
If the price keeps going up, I prefer to make my own bread at home.
The cost of flour has jumped 30% in recent months. The bakery's owner had no alternative but to up the price of his baguette by 10 cents to €1. A weighty choice, but with energy prices also soaring, it may not be the last time.
Unfortunately, at some point, it's got to come to a head. It's possible in the future that we'll have to put our baguette up to €1.50, €1.60.
But is that a price customers will be willing to pay?
If it's still as good, yes.
If we don't have a choice, yes, of course, at the expense of something else.
Franck Giquel's electricity contract runs until the end of the year. Based on current offers, next year he'll have to pay 10 times more per kilowatt hour than currently. To keep his bakery above the breadline, he'll need to cut costs. From the month of January, he'll also be working by night during off-peak periods to keep the energy bills from rising.
So, Aaron, there definitely is a cost to making dough.
Yeah, indeed. Charles Pellegrin, thank you very much.